Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Dan Krueger with us. Dan is with Invictus Multifamily. He is a multifamily expert, which we always love to talk multifamily here on the Real Estate Investing Club. So I'm super excited. Dan, thank you very much for hopping on the show.
Thanks for having me. Excited to be here.
Absolutely. I told you before we hopped on here, we like to start with stories. We like to hear how people got to where they are today. So why don't you take us to your story? How'd you get started in real estate in the first place?
Yeah. So I actually came from a family of artists. So when I was growing up, the expectation from my parents was, do what you like. There was no pressure to go and, do anything in particular. But there was definitely an incentive instilled for me from a young age to, mostly from my mom, to go and get a job at a large organization, benefits and security. And so that was something that they never had, that I wouldn't say push me towards, but they suggested that would be a really cool thing if you did that, not expecting you to do that. But that was a seed that was planted in my head fairly early when I was younger. And so I did go that route, went to college, studied finance, got into the corporate space for a while, spent 5 years there, corporate finance. And within a couple of years, realized that was not serving me. After the first job, I thought, okay, I'll get a promotion to the next role. That's where things are going to get really engaging.
Then it'll get fun.
Yeah, it's always that 1 year mark. It was always, interesting when it was new, but most of those roles, especially in large companies, you get fairly pigeonholed and you just get bored really quickly. So started a side hustle while working in the corporate business, consulting business, not related to real estate, but nutrition focused consulting, which is great. I got some good cash flow from that and started to kind of match my corporate salary. And that sparked the entrepreneurial bug that I didn't know I had, and realized that I really like things where if I want to work twice as hard, there's a potential for me to make twice as much or grow twice as much or exponentially more, which is not the case in corporate finance. So realized that was something that was available to me. And shortly thereafter started to go down the real estate rabbit hole. And it was in that last year of working in the corporate world where I was out shopping for that first property, knowing that, okay, I've got my side hustle going that can pay the bills, but it's not really scalable. I'm selling my time for money. And real estate looked like the scalable kind of longer term game plan that made a heck of a lot of sense, because I've always been obsessed with investing and finance and things like that. And this was a much more effective way to scratch that itch than corporate finance.
Nice, man. I love that trajectory. You were you were in corporate, you had the security, you realized it wasn't what you wanted to do. But before just, doing a fire sale and jumping out willy-nilly, you got that side hustle, you got the money coming in, then you took the leap into real estate. So I love that.
Yeah.
Similar.
And I didn't have that as a plan. That just happened that way. So I'd like to say that was a strategic.
It was a master plan. We're giving it to you.
Yeah, it just kind of worked out that way.
Yeah. No, it's smart. And it's something that I kind of, my story is similar, but not exactly. I was in the corporate world too. And I didn't like it, wanted to get out, but I jumped out before having enough money. And that was a stressful experience. And I didn't really have that side hustle. I had plenty of side hustles that I failed at, but real estate.
You probably accelerated pretty quickly though. I mean, I will say that if you put yourself in a situation where you need to perform, you're going to learn quicker, move faster. I only did one little 6 unit my first year. Right. So I had that kind of comfort of, okay, I've got the side hustle, knowing it's not the long-term thing. I probably would have gone a heck of a lot faster if I had just ripped that Band-Aid off quicker, but we got here. So
yeah. No. Yeah. When your feet are to the fire, you definitely move fast. So I know, we're here to talk about real estate, but your side hustle was nutrition consulting. That is super interesting to me. How did you decide to get into that?
Yeah. So I've been really passionate about fitness and nutrition from probably about the age of 18 or 19. That was really one of the first things that changed the way I thought about things. When I first started lifting weights and learning about nutrition specifically, I realized how much control I had over my body. And I was like, this is really exciting. I didn't realize I had the option to have this much control over my body. And that started to kind of bleed into the career side of my life as well. Like, hey, wait, maybe there is something outside the corporate world. Maybe there are more options I didn't think was available to me. But I got obsessed with that. And it all kind of came down to the data side of things and the science, because I'm a bit of a quant in that sense. And I really enjoy the analytics of anything, especially in real estate. But if I can bring data and science to something, I can get obsessed with it and do really well at it. So I really dialed that in on myself, met my wife, she got really into it. And people started to notice. We did a couple shows back in the day, which didn't really get into it. It's not really our scene, some of the fitness shows, but we got really good at it. And a lot of people just started asking me like, hey, you guys, you still eat like normal people. I see you drinking wine, eating burgers because we're foodies, but you're not packing on the pounds. Like, what the heck? And I was like, oh, it's actually, if you look at things from more of a quantitative perspective, managing your calories and that kind of stuff is kind of like managing a budget, right? And so if you kind of focus on stuff that matters, take a more quantitative approach to it, you can actually live a very enjoyable lifestyle and still be in good shape too. So I kind of carved out this little niche where I would customize people's eating programs for their schedule. So I'd work with a lot of busy professionals, like salespeople in particular, who are on the road living out of hotels, and put together these custom programs for them that worked in the restaurants where they were staying and the happy hours that they had to go to, and showed them how to make it work, get the results they wanted while still living an enjoyable lifestyle or just utilizing whatever resources they had wherever they happened to be. So it was fun, but it was very much customized, selling the time for money, enjoyable, but not scalable.
Yeah. That's still, it's a pretty cool side hustle that you got going there, especially that you were able to replace your corporate salary with that. That is means it was a success for sure.
Hey, if you could teach people how to be in good shape and eat burgers and fries, they'll pay you for it.
It's an easy sell.
Yeah, it's good.
All right. But that is not where you stayed. You had some success there, but ultimately you landed in real estate, which is why you're here today.
Yeah.
So you focused on multifamily, which, it's not, that is a really popular route, and it's a great asset class. So why did you decide to get into multifamily, and why did you ultimately land there?
Yeah. So when I started going down the real estate rabbit hole, I think, it was around, I was in college in 2008, 2009. And so while I was kind of educating myself on finance and all this kind of stuff, there was, obviously this big kind of consensus that real estate is risky. And so I never really spent a whole lot of time looking at real estate from an investment perspective, because I started to study investing in finance while all that was happening. So I was like, I just kind of wrote off the whole real estate thing. But I realized that the valuation in multifamily made a heck of a lot of sense. And as soon as I heard about how multifamily properties were valued like a business as opposed to just on comps, I was like, that makes a lot of sense for my quantitative brain, right? I could wrap my head around that, as opposed to a single family house where you're just kind of hoping things go a certain direction. That made me feel comfortable. And the numbers made a heck of a lot of sense. So that's initially what hooked me onto the multifamily. And honestly, all commercial is pretty much going to be like that. But multifamily was so simple and it made sense and just clicked. And I like simplicity. That's kind of what I zeroed in on from day one. So first property I got was a 6-unit for a reason. As soon as you hit 5 units, that valuation methodology will change. And that's, in my mind, where the risk profile changed pretty dramatically.
Yep. Yep, absolutely. So yeah, you started with that 6-unit, and then from there you guys scaled up. I know that vertical integration is something that you particularly are pretty adept at. You guys have had some good success there. So once you started to build your portfolio, your multifamily portfolio, what were the first few hurdles that you had to overcome, and how did you what were the systems that you implemented to get those done?
Yeah, well, I mean, the hurdles initially were I had zero experience.
That's a big hurdle.
Yeah, I mean, I knew nothing. I did a lot of studying. And luckily, the financial underwriting, model building, budgeting, that stuff was easy for me. But the real estate specific aspects were brand new. So the first big one was the management hurdle. When I got that first property, I thought I was going to have this be, relatively passive by hiring a third-party management company. But this was a value-add deal. And even though it was only 6 units, it was a fairly heavy lift. There were only 5 units in there that had, or there was only 1 unit in there that actually had a resident that was appropriate, and the others were, crime and just destroyed. And it's just, it had to be a complete gut job. And, trying to hire a third-party manager to oversee that. In my mind, I did not realize that I needed a project manager.
They are not project managers.
They are not at all.
Sure. Yeah.
So took about 6 months for that to really hit home with me. And then we severed ties, and I was like, I'm just going to do it all myself. So I was working alongside them pretty heavily for those first 6 months. And I learned a lot, and I got to the point where I was like, I am just going to take it from here. I'm going to make this not at all passive and do all the things myself. And I got to the point where I could turn around and refi 9 months after I got it. Took it from 475 to 600, and then 475,000 to 600,000. Refied some capital out and used that to get an 8 unit right down the street. That one came with a caretaker, and so he had me covered for that 8 unit and that 6 unit. He was fantastic. And then by the time I got that third property down the street from that one, that was a 15 unit. That's where I went out and started actually building the team, making that first full-time employee hire, which was a property manager. And that was kind of the impetus for the vertical integration obsession from day one, is just really trying to keep all the responsibility for that in-house, because nobody's going to care for these assets as much as the owner does. But the next best thing is going to be an employee of the owner who's only worried about their properties and who isn't worried about anybody else's. So it became clear pretty early that was the best route for us, unless we wanted to shift to a different asset class. Otherwise, third party, it could still make sense once you hit a certain point. But those first couple properties, if you're doing value add, it's going to be tough to outsource that.
Yeah. And I mean, that's also dependent upon your asset class. Like you said, in self-storage, you can get third party for one storage unit.
Absolutely. Or even, turnkey properties. I mean, if you get something that doesn't need anything done to it, it's just cash flow. And then, third party, they just collect the rent checks and not a whole lot else to do. So,
yep. But that is a good point. I mean, you do see economies of scale. Not economies of scale. You do see, you realize savings when you bring everything in-house versus third party, but you do have to identify that inflection point, at which point it makes sense to do that. How do you and your team kind of decide, like, okay, now is the point where we can't do all this ourselves. We need to hire somebody and bring them in-house and have our own property management company.
Yeah. So by that third one, it became clear that it needed to be a full-blown operation. All right. We needed to actually get maintenance in-house, ideally the unit turn renovation crews in-house. That became obvious that's where we need to head. Largely due to personalities. I'm a bit of a control freak. And so I'm more than okay with doing more work, taking on more responsibility and more risk, knowing that if anyone's going to drop the ball, it's me, and I'm going to work my butt off way harder than anybody else who I can outsource this to. So that made me feel very comfortable at first. But I'd say that inflection point initially occurred after that first go around with the management company. At that point, I decided that third party is just it's not in alignment with my personality. It can work. You can make it work. Like I mentioned, if you're in the right asset class or you've got enough units. But even if I was in the right asset class and had enough units, my personality just wouldn't be a good fit for. One of our core values is we own what we do. And what that means is we take ownership for as much as possible, because at the end of the day, we don't trust anybody as much as we trust ourselves. Yep. So that became clear, I think, really, really early for us.
Yep. And I'm sure you guys, you saw the benefits of being local. It sounds like all of up to the point that you've talked about now, all of the assets that you bought were within the same city, at least. Is that correct? Oh yeah. They were all within blocks of each other, those first 3. The second one was 2 minutes down the street from the first one. And then the third one was 30 seconds down the street from the second one. And we've stuck to that. We're still hyper focused on our region. And so even, we've got, 257 units now with 217-ish under contracts. We'll have, by the next couple of months here, we'll have just shy of 500 or so, and they're all really clustered. And for those of you who aren't aware, Minneapolis and St. Paul are
they're called the Twin Cities because they are effectively just one city.
Yeah.
And I want to say I just measured it on Google Maps. If we measure from the farthest property to the farthest property, I think it might be like 10 miles the most.
Oh, wow. That's
so very concentrated.
Yeah. Wow. Okay. So that gets me kind of interested. I invest all over the US. I have properties in like 6 states. So I'm the exact opposite of you.
We're the minority. I think most people do what you do.
No, but there's huge benefits to being hyper local. So the problem that I find with focusing within 10, 20, 30 mile radius is just finding good deals. How do you go about finding deals that actually make sense when you're focusing on such a small area?
Yeah. So it's a double-edged sword. On one hand, gives us a lot of leverage in a lot of ways, which I'll kind of go into with, how we actually do find these deals. But on the other hand, it does limit us. We are all in one area. So our eggs are all in one basket, which it happens to be a really great basket. If you actually look at the metrics for
the basket. Yeah.
It's a great basket. If you look at all the stuff that matters, the job market, the cost of living, or the cost of living relative to average incomes, there's a nice big healthy gap between how much money people are making and how much it costs them to live here. Whereas if you look at some of the really hot markets, there's not much there. They've run pretty far, and there's not a whole lot more room that they can run. So if you look at that, if you look at the job market, we've got more Fortune 500 companies per capita than anywhere else in the US.
Oh, wow. I didn't know that.
That's why we're such a stable market, is that no matter what kind of crap is hitting the fan, we've got enough industry diversity and enough different companies that we're almost never going to have a Detroit-like situation here. So we performed really well during every economic downturn, and that's really what we like, the limited downside risk. We might not be flying sky high like Texas, but we're also going to avoid that downside volatility. But to answer your question, the way we find good deals in such a concentrated area is because we've been so focused here for so long. That allows us to build some really strong relationships with a lot of local owners. And so initially, the first few deals we'll find through brokers. Then you come to find out there's really maybe 5 or 6 guys or groups that own the vast majority of everything. And a lot of them are getting older and they're kind of retiring. So we've had a lot of time in one area to build up some really good relationships. And now these come to us off market. There's no bidding wars. And these guys that we transact with care a heck of a lot more about being able to transact with somebody who they know is going to perform, because they're taking their capital from the properties they're selling, they're 1031ing into something else. And so they've got a nice tight timeline. They've owned these things forever. They've made their money. They'll gladly sell something to us at 125 a door that should be going for 150 if they know we're going to perform and they know we're going to hit the timeline, because a lot of the times these guys have owned these properties since the 90s. So they've made their money 3 times over and they want surety of close.
Yep. That makes sense. Being able to show that, or at least having the trust with the seller that you are going to hit the table and it is going to actually close, that's worth more money. And being on the seller side, it makes sense. You don't want to go. You'd rather go under contract to the deal that is, you get less profit. At least you know that it's going to be closing. Something that you're not sure.
Exactly. Yeah.
All right. Well, hey, I did take a look at the clock. It looks like we have gone through our 15 minutes. So I'm going to have to push us into the quick question round. Are you ready?
Let's do it. Let's do it.
Starts with books. I'm a big bookie, but if you're not a bookie, you can do any form of education, YouTube videos, podcasts, whatever you like. Give me 2 recommendations, 1 for general life wisdom and 1 for real estate specific. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join.
I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
General life wisdom. The Almanac of Naval Ravikant. Are you familiar with Naval Ravikant?
I'm not, no.
He's okay, so he's a cool dude. He got pretty famous, I think, with more mainstream audience. Well, this is supposed to be quick, so I'm going to tell you the Naval Ravikant Almanac. Check it out. Just really, really sage philosophical wisdom from somebody who's coming from a angel investing background, founder of AngelList, early investor in a lot of those tech startups like Uber and all those guys. So he's kind of one of those guys, kind of like a Chamath Palihapitiya type. He's more mainstream, I think, but really great life and business philosophies in there. Just pure gold. Got to check it out.
Perfect. Yeah, I just pulled it up on Amazon. I'm definitely gonna have to pick that one up.
Yeah, you'll dig it. You'll dig it. If you like any kind of philosophical type stuff, you're gonna like it. And then the real estate, I would say there's a lot of real estate books out there. The one that I always recommended before we put ours out was the ABCs of real estate investing by Kevin McElroy. I always felt like that was a really comprehensive one-stop shop that kind of it covered pretty much everything and didn't go super deep, and it was pretty consumable even for somebody who's fairly new to this. So before Anthony wrote our book, I would always recommend that to potential investors because it was very consumable for somebody who's coming in with very little knowledge. And then shameless plug, you got to check out our book, which is just the 101 book on how to passively invest in real estate. But I'll keep it
perfect.
quick.
And yeah, we're going to get that URL at the end.
Yeah.
And so we'll definitely cover that for sure. That leads us to the next question. And this one is for your younger self. So if you could go back to the Dan who was still in corporate finance, he was just getting to the point where he's like, shit, this is not my gig. I got to find something else. Go back to him, look him in the eye, give him one piece of advice moving forward.
Embrace partnerships. My first year was very much ego driven. I wanted to do everything. I wanted to be self-taught, wanted to own 100%, get all the credit, me. Once you embrace partnerships and other people, you are going to scale so much farther, faster.
That is
slap them in the face and tell them that.
Great advice. I love that. And it's more fun when you have partners. So
yeah,
great advice. Moving on. Next question. This one is nope, I already did that one. Next question. This is habits. Habits form the foundation of our life. So if you could point to one thing you do every single day that you feel contributes the most to your overall health, well-being, happiness, and success, what would that be?
Wake up early, go to bed early. I'm in bed ideally about 9:30 or 10 at night, and I'm up between 4:30 and 5:30, usually right around 5. It's amazing how much you can get done before everybody else wakes up. So anyone who's not a morning person, I never was either, but being able to get up and execute on some of those big things where you can just plug yourself in for 3 hours and no phone calls, no emails, no texts. I'd say that just being an early riser.
Love it. What's that quote? I think it's by Benjamin Franklin. It's like early to bed, early to rise makes you healthy, wealthy, and wise, or something like that.
That sounds good. Yeah. I don't think I've heard that one before, but anything Ben Franklin says is usually worth listening to. He's a smart guy.
Yep. All right. And this was the next question is your Superman strength. So we're all put on this earth with something we particularly are good at. You're no exception. We all have something that we give to this world. What is your Superman strength? What is you exceptional at?
Oh, geez. Let's see. I'd say my strength might be being able to effectively break down a complex topic and explain it to somebody. Specifically, when we're talking about finance, real estate investing, stuff like that, I've got a lot of feedback from people that I can be quite good at using different analogies and metaphors to communicate kind of an abstract concept for one person and take it and make it something they can relate to. And if you've seen any of our content, it's all about education. Anthony and I are both really passionate about educating. So I'd like to say I do have a little bit of a skill set in teaching people new things and helping them get across that hurdle, specifically around the finance stuff. Taking away that financial stress and feeling of not being able to control that part of your life. Hopefully I'm getting pretty good at it. Been trying for a long time.
Perfect. No, man, I love it. That leads us to the second to last question. And this is, I think I know what you're going to say here, but this is about location, United States. It's a big place, plenty of opportunity out there to invest. So what area in the United States are you most excited about putting your hard-earned dollars?
Yeah, I mean, we've been very focused right here for a long time. I will say that there's a lot of areas in the U.S. that I think are doing incredibly well and have a lot of upside in the future. Outside of where we're at, we are where we are at because it's core to our business to have a boots on the ground presence. And as soon as we can still have that in other parts of the U.S., and this will probably be through strategic partnerships with other groups, we're definitely going to be expanding out. But yeah, right now it's Minneapolis, St. Paul, and first tier suburbs of Minneapolis, St. Paul as well.
Cool. Love it. Minneapolis, St. Paul. You know it. Stick with it. And that leads us to the very last question. You've given us a lot of good advice. I'm sure people out there want to reach out and say hi. So what is the best way for them to do that?
Yeah, you can check out invictusmultifamily.com. You'll find links to our podcast there, Multifamily Investing Made Simple. You can also just type in Multifamily Investing Made Simple to any of the places the podcasts are found, and you'll find us. We've also got the passiveinvestingbook.com. That's where you can also find it on Amazon. Passive Investing Made Simple, which is just the 101 book on how to invest in real estate, multifamily real estate in particular. And then type in Dan Krueger into LinkedIn, Instagram, Facebook. I'd say LinkedIn's probably your best bet if you're going to try to contact me on there. But otherwise, through the website, it's probably ideal.
All right, perfect. I will put those URLs in the show notes. So if y'all want to reach out to Dan or maybe get that book, go ahead and click a little more in the description. It'll pull down the full description in there. You can find the URLs. So Dan, that wraps it up. Thank you very much for hopping on the show and sharing your real estate story with us.
Yeah, thanks for having me. It was a blast.
Absolutely. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, as always, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the wholesaler's template for quick assignment cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.